All right, let's talk about the bigger news of the week. Coinbase is acquiring Deribit. It's the largest deal in crypto history. So I think folks have known for a while that Deribit has been in market. It's been rumored that some other crypto exchanges were looking at them. For context, Deribit controls roughly 80% of the crypto derivatives and the options market in. So Deribit is a derivatives venue. They control roughly 80% of the market. I think back in March, Bloomberg leaked that they were selling. They've been selling for quite a while before that, I think. Pretty relatively small team. They've done an amazing job. This is a really interesting deal. So I heard that Tencent was looking at the deal. I heard that some of the other big crypto exchanges were looking at it. But yeah, it's a $2.9 billion deal, $700 million in cash, and then another 11 million in shares. Coinbase stock is at $200. That's 2.2 billion. So 2.2 billion of stock, 700 million of cash. So the last numbers that I saw from Deribit from a fundraising deck was from 2023, where they were doing roughly like 85 million in profit and 120 million in revenue. So really high margin company. But the thing that's happening here is the exchange. There's a broader trend of M&A right now happening in crypto. The exchanges are the big buyers in crypto right now, and they want two things. They want funded accounts, and they want the ability to offer more products to their traders. So perps, options. I think the next wave of acquisitions that you'll see crypto exchanges make will be in the tokenization and RWA space. So the ability to offer, maybe Coinbase can offer tokenized stocks, credit funds on chain, things like that. So really, really interesting acquisition. The industry needs M&A to thrive. You need the venture investors to do well from their equity investments. You need the companies to be able to go public. You need companies to be able to sell. So this is a really healthy dynamic, and I don't know. I love to see it. I think it's great.
Yeah, absolutely. I mean, what's interesting too is Coinbase is up on the announcement. 6%. The entire market's rallying, but we'll see after earnings what the commentary is. If I believe they report after close today, right? Coinbase does. So that's going to be interesting. What the commentary is from the team, Brian and the team. So yeah, it should be really interesting.
Look at this. So we actually Blockworks Research just launched M&A and fundraising data on the platform. Look at this. So it only goes back to Q2 of 2018. This is this big green chart bar right here on the right. This is Q1. So here, wait, let me actually make it
Ripple.
Yeah, this one is Ninja Trade, the Kraken Ninja deal. This is Ripple Hidden Road,
right?
Or vice versa. But yeah, I mean, look at this M&A data by sector just growing. This doesn't even include the Deribit Coinbase deal. Well, this will be added overnight. So
wow,
yeah. So I guess zooming out from this deal, I mean, the thing that maybe some folks are not privy to that's just really interesting is I've never seen so many crypto companies in market right now.
Yeah.
Especially the kind of class of 2017. A lot of the custodians, a lot of the data companies, a lot of the staking folks, these are like the founders have been building for 7-8 years. A lot of the companies are doing somewhere between like 5 to 30 million in revenue, and a lot of them are selling.
So. Why would Derbit sell?
Because why would Derbit sell?
Do they want like access to the distribution that Coinbase has built? It seems like, look, they command most of the market share. Is your point saying like they have so much market share that it can only go down from here? And if it goes down from here, it starts like they've sold at the right time.
And it's it's a slightly messy cap table, but it's a heavily founder owned company. So I think this might just be the founder saying, look, we've been building for like a decade in crypto. It's a multi-billion-dollar acquisition, and this is generational wealth for the founders, I would guess. Also, maybe if you take that out of the picture, probably you could argue the space is getting much more regulated and is moving more onshore. Deribit is more like an offshore venue.
Yeah. I think I was on another podcast earlier today, and you got to think like, I think, and you let me know if this makes sense. There's a lot of signaling Coinbase buying this because they feel that they can integrate Deribit into their core offering, which they've been missing for a while. Like what's made Coinbase product offering is really lacked is this, right? Options and perps and, and so offering this, I mean, it's probably really interesting from their standpoint, justifying the acquisition, like, and how they think about layering it in. It probably tells you everything you need to know about how they believe the regulatory environment is going to unfold, particularly in the U.S. You also see, I think it was last week, you've seen a lot of the offshore exchanges now start to build a presence in the U.S., which is really encouraging. I think it was like OKX that is now launching an office in California, I think in San Mateo near SF. So yeah, all this to say is like really, really encouraging developments on the regulatory side. Like,
so I moderated this thing with the head of Coinbase's derivatives business in Dubai, and they are. I mean, it is an all-out push for them with perps. Like I think Robinhood and Coinbase are. I mean, they're rolling out perps, derivatives, options. It's all coming to the U.S. So.